So this is a hull insurance part 2 of book IC 67. This chapter is basically dealing in underwriting aspects of the hull insurance, proposal form, other relevant documents, valuation, classification, rating, and other important factors related to underwriting. We will also touch upon the IRDA guidelines regarding the use of marine hull manual for insurance and different types of vessels. So basically it is underwriting and hull manual. Basically I could not get manual prepared by IRDA. Nevertheless, because I was involved directly or indirectly with the manuals prepared by New India Assurance Company and United India Insurance Company, certain things I could get the copies during my lecture sessions. What I wanted to tell that I have given a link. Maybe from United India's hull manual, if you go on this link, there is every possibility you would get the manual in PDF format. You can download that one, or there is every possibility that if you contact United India Insurance Company and as a student or as a you may try to get a copy from them directly. Somebody will be available. It should not be any serious issue because New India, the United, New India, all this public sector, they are not reluctant in knowledge sharing, etc. You may try to get it, and if you get it, it is fine. Thank you. Basically, whenever someone comes with the proposal, there is a condition survey warranty, that is a joint health committee warranty is there, which is not practiced in Indian market. The warranty is such that they will say they will accept the premium, but they will say that valuation and condition will be from the list of surveys, it will be given to the uh, proposer or the hull owner. He will inspect the vessel, and if he feels that the vessel is in good condition, he will give condition and valuation report along with, if any conditions are to be imposed, he will inform that these are related to seaworthiness, etc. If he feels that no, the vessel requires structural survey, then he will also inform insurance company that this requires additional survey, and then say within 1 month of time or prescribed time period, the survey is carried out. What happens that the client, when he comes to you for with proposal, he doesn't go back, because if you tell him that you go and get survey report, condition survey report, there is every possibility that he will get it from the grey market, and it may not be a true condition of the vessel or true value of the vessel. But then this is not practiced in Indian market. Indian market starts with the proposal form for sundry hull. So you can say there are three types of proposal form. One is for the inland vessels, or you can say barges, tugs, dredgers, sailing vessels, fishing vessels, and sort of things which is you can, in a way, it is inland. Of course, sailing vessels are foreign going, wooden sailing vessels. The This is known as a brown waters. The blue water will be ocean going vessels, and we have seen there are different type of ocean going vessels: dry bulk, liquid bulk, over dimensional, containers. And considering the nature and type of cargo, you can have the vessels are available, and then considering whether it is a launch, a passenger vessel, inland, brown water, blue water, all these things. So there is a separate proposal form for each section. Now there is a specialized proposal form for certain risks such as builder's risk insurance, ship repairs liability insurance, charterers liability insurance, stevedores liability insurance. So for all these purpose, you have a different type of proposal form with the insurance company. The proposal form is designed very nicely. The proposal form is asking you technical details of the vessels like type of the vessel, age of the vessel, the value is related with the age, gross tonnage of the vessel, because other than total loss policy, other than total loss premium, it is related with the gross tonnage, the collision bulkhead. Now you see, these are the important factors that if you have a collision bulkhead is a foremost bulkhead in a vessel. So at the time of collision from forward side, that will protect the rear compartments or rear holds because of this collision bulkhead which is provided in the ship. But then the second is double bottom. So these are very paramount questions. If you have collision bulkhead, the premium is different. If the double bottom is there, the double bottom is you can say there is a false bottom. It is in, you can say sort of compartment and tank top and outer hull. This double bottom is used for void space, taking oil, taking ballast water, and sort of things like that. In case of grounding, the outer shell is damaged, but the inner shell may not be damaged. The water would restrict entry inside the cargo hold. There would not be any liability claims, and the vessel is having additional safety as a double bottom. Then the question is whether you have a single engine or twin engine. So in twin engine, there is every possibility, that uh, even with failure of one engine, the people, the master of the vessel can come to the nearest safety place for the engine repair, nearest port of refuge, one single engine. The next questions what they are asking is trade related. Like in which trade you are engaged, whether it is going to be east coast or west coast, or the trading is unlimited. So what is the nature of your trading? Nature of cargo, the ownership and management. See, that is also very important factor. The ownership profile of a company, the management, who is going to manage the vessel, whether it is self or there is external managers are there. International safety management compilation. Which classification society it is. So age, of course, if the managers are Indians, even foreign flag vessels can be insured in Indian market. So classification society, managers, owners, these are all very important factors considering the safety of that particular vessel. Then insurance related details like condition of insurance, the period of insurance. Condition of insurance means whether you require TLCTL only, or it is a comprehensive cover, or it is a single voyage policy, or it is a time policy. And then what is the condition of that vessel also, the period of insurance, the claim experience of this particular owner, the previous insurance history, how many owners this particular vessel has changed during up till now. These are all very important factors. The ownership profile. She is not a singleton. So because you are more comfortable when you know the management is very nice and their philosophy is not to have claims, unnecessarily claims from the insurance industry. But there are some companies, they have a different philosophy when it comes to the insurance claim. They have the ledger in their books of accounts that profit from insurance. So singleton class is not ICS class. The age is advanced. So these are all declining risk in a way for the marine hull. Every vessels are registered. Earlier, say for example, fishing trawlers were registered with customs. Then he started with the maritime boats. Then the fishing vessels registration changed to Directorate of Fisheries. Captain of, it depends. But then every vessels have a registration number. The ocean-going vessels are registered with a DG Shipping's office, Marine and Mercantile Department. The next thing what you are asking, you know that she is registered. Why registration? Insurable interest. I am not using somebody's vessel. I am having the vessel which is registered with me only. If at all there is a process of changeover of the name, ownership name, etc., this should be disclosed to insurance company that I have recently purchased and I have already applied for the change of registration. It is going to take certain time. That gives the MOU and all things will prove that yes, I do have insurable interest when I am taking this insurance. Then the valuation and condition survey. Because I would like to know if it is a classification society reports are available with a ISES, then the condition survey should not be very serious issue. But then valuation, what is the value to be insured? Because for the old fleet, somebody will like to keep the for a the medium age vessel, somebody will like to keep minimum value with a comprehensive cover. So they are saving in the premium, but they are getting a comprehensive cover. But old fleet, say barges are there, which is 20 years old, 25 years old. The valuation may be 3 crore, 3.5 crore. But there is every possibility the owners will try to insure it for 5, 6 crore rupees, higher valuation. And then they know that, the chances of sinking of this vessel is much more. Flat bottom barges and during oceanic condition, and then carriage of cargo can liquefaction, and that is the reason they pay more premium. But then that is they are taking a risk, and then they get more value at the time of total. You have to be very careful when it comes to valuation. The valuers should be recognized and good. Uh, you try to understand what I'm trying to say. The details of bank interest and loan and arrears due, etc. There is every possibility that the smaller crafts like fishing trawlers, barges, they have a loan, and if they are not repaying, the interest and the interest on the main original amount of loan, etc., is mounting so much, then it may be the more than value of the insured property. Then the chances of scuttling increases in this. At least when it comes to the fishing trawlers, etc., you have to be very careful, because when the bankers are breathing on the neck of fishermen, he feels that if he's scuttling, he will get money from insurance company that will be paid directly to insured, and he will not breathe on my neck. So there are many methods. We are not going into that, but then at the time of proposal, you have to be very, very careful, understand about the vessel when you are accepting a risk. So there are very important underwriting factors. So classification of vessel is very, very important if it is an ocean-going vessel, sea-going vessel. So classification certificate confirm that ship has been built according to the standards of class, and she is also maintaining a class. The classification society should be a member of ICS. The main object is to promote safety at sea, safety of life, safety of property, safety of cargo, and of course environment. Why I should have a very good vessels? So Indian register, if you look at the Indian register of shipping, earlier, when this started, or when I started my practice as a hull surveyor in maybe around 81, I have seen that if she is classed with IRS, there was a 4% reduction in the premium was given overall. Now, of course, it is discontinued. That now the clause says that initially you should have a class. The hull and machinery surveys initially IRS was doing, but that practice has been discontinued. So this is established in 1975. Now it is a full-fledged member of ISCS. There are many other classification society like American Bureau, Chinese, Russian, Italian, Nippon, Japanese, BV, Bureau Veritas, DNV, and like 13 Korean, Croatian. So these are the recognized classes, and then you should have the classification which is recognized or member of ICS. To underwriting factors, the hull rating is also in two parts. One is total loss rates and other is other than total loss, OTL what they call it, other than total loss rates. So hull underwriters considers total loss. Then there is a particular average, that is a partial losses. Then there is a general average where multiple interests are involved in the venture is at risk. Then there are contributions. Contributions of the contributory value is the reduced value after loss, and there is a contribution. Then there is a collision liabilities, that when two vessels are meeting with collision, they have impact damages. The degree of blame for the collision is decided by courts. Then there are salvage charges. The salvage charges are, if it is a Lloyd's open form is signed, uh, it is no cure no pay basis. The PNI club comes in picture. But for sundry vessels, inland vessels, the salvage is on contract basis. 90%, 99%, the salvage rates are quoted by Indian Salver, which is around 70% of the sum insured. Very high rates they are charging. So you have to be very, very careful. There are less salvers, there are less capable salvers, but then there are some Goa-based surveys, etc. salvers. The charges at higher side. So once the salvage is required for sundry vessel, if the owner is very good, qualified, experienced, he may engage contractors and do it himself, and he will claim the expenses under sworn labor charges. That is also okay, because a very experienced person, he knows how to remove his own vessel. He also knows, acquainted with the people, those who are expert in this field. So both premium combined and divided by sum insured are expressed as a percentage called as a slip rate. You find out what is the market. It is always insured on market value of the vessel. It is not a reinstatement value or the replacement value of the vessel, but it is a market value of the vessel. The market can be falling, market can be rising, considering the freight available in the market. If there is no freight, the market starts falling, and if the freight is very good, naturally the prices starts going up. So how we calculate? We calculate the total loss rate. Then we calculate what is the other than total loss rate. Put together percentage of sum insured, that becomes the slip rate. If the rates percentage, you see what should be a rate in international market. I have trying to see the average rate, which is around 1.1 percentage. That should be average rate. In Indian market, it is not practiced. It is much less. The market is very soft. Many private insurance companies tried to venture in hull business, but then they backed out eventually. There are very few, one or two private insurance companies are still practicing hull insurance. So it is a rate percentage applied to the insured value of the vessel, and particular average premium have bearing on the gross tonnage. So what is the gross tonnage? It is the gross volume of the vessel. It is the size of the vessel. Based on that, other than total loss, premium is calculated. I have given a link of United India's hull manual. Excellent. The students can download the copy, keep it that one. If you have any doubts, go to the underwriter's hull department, discuss with them. They will be definitely helping you to find. If you are in a hull rating, etc., and you should know about the hull rating, about the hull, the claims, because there are chances of jacking up of claims in hull business. So as I said that hull rating is total loss rating and other than total loss rating. So that is the average loss other than total. So this is decided by size of the vessel. As I said that gross tonnage. Gross tonnage, uh, earlier it was GRT, now they call it only GT. Earlier it was gross registered tonnage, but now it is only gross tonnage. So this is the overall size of the vessel. It is overall volume of the vessel in cubic feet, cubic meter, whatever you say. So most consistent to use is case of cruise and passenger vessel. You are also asking other questions like collision bulkhead, double bottom, and sort of thing. So deadweight tonnage or gross tonnage are considered for calculating premium along with the age of the vessel. Age of the vessel, classification, ISM compliance, these are all warranties. So gross tonnage indicates volume of the vessel, uh, and then the volume. Say if they give tonnage, say for example, the example GT is mentioned 5,000. They will not write tons, but they will say 5,000. Now you want to convert into volume. I remember the formula of cubic feet. It is 100 multiplied by 5,000. That becomes the volume of the vessel ship. Net tonnage is the net place available for carriage of cargo. So there are certain ratings, but the hull underwriting rating, premium rating, it is based on gross tonnage and age, etc. Then the deadweight tonnage. What is deadweight tonnage? It is a total cargo plus non-cargo carrying capacity of the vessel. So there is a constant weight. There is a oil in pipelines, or the water in pipelines, maybe some mud, etc. So put together cargo, non-cargo, and all of the weight, it becomes the deadweight tonnage. So what are the underwriting factors? You should have the copy of hull insurance manual. Earlier, Tariff Advisory Committee has published the manuals for underwriting. Excellent. It was very excellent. The ratings were good, reasonably good, taking care of various things because the repairing charges are increasing. The steel rates are increasing. So if at all there is a loss, it is very costly affair. Going to dry dock, remaining in dry dock, and then the steel repairing. I'm telling you that if there are damages, it is going to take you many times. If the heavy damages after grounding, it can be around 50% of the sum insured. And then you understand that is the reason condition valuation is very important. The insurance are charged their own risk rates, can charge their own risk rate. They have the manual was there, TSC is discontinued. The New India has prepared their own manual. United is having their own manual. I have not seen uh, the Nationals manual or the Orientals manual. Somehow uh, I could not get that one. But because I said that in United and New India, I was involved directly or indirectly, I do have the copies of them. Also, United's hull manual, it is available. So you can also try and download that one, keep it in your possession. So the rates are governed by hull manuals. After detariffing, tariff rates are not mandatory. Although if you have the tariff, it is the best thing. Any old timer like me can have the copy of such thing. But the tariff advisory committee is no more in existence. So you should know that rates are there as a guideline rates only. Earlier you used to take the certain risk used to be referred to TAC. Still, if the risk is high, warranting for reinsurance, etc., you should take it to the ROHO for the rating, considering the quantum, the value of the hull and machinery. The rating is not linear. You can say it is not same for different type of vessel. Sailing vessels will have a different rating. The inland vessels will have a different rating, like barges, tugs, harbor crafts. Dredgers, those who are digging or they are removing the siltation, etc. More or less, they are in the harbor only. They are not. Nobody is dredging in the mid sea or open sea. So dredgers are again inland. They can be self-propelled. They can be dumb. Then there is a separate policy for jetties, pontoons, wharves, ports, uh, etc. Then there is a shipbuilder's risk policy is also there. Ship repairs liabilities can be covered. Then the charter's liabilities can be covered, and the rating, you should know the rating for each of the different types, like launches are there, passenger vessels are there, luxury yachts are there, speed boats are there. So there are different type of fishing vessels. As I said, there is fishing vessels are there. So considering size, value, you should know the risk associated with that. So these are the Hull insurance manual will give the underwriting uh, the ratings for total loss, TLCTL, and other than total loss. Of course, this is not directly from the book IC 67, but then based on my experience factor, experience since 81, I have added certain slides which may not be directly related with the IC 67 book. But if you are any person is seriously interested in this whole business, it will be helpful to him just to have a basic understanding. The earlier TSE used to give rate for ocean-going vessels in view of the data available with them and the international market assess available to it. The medium risk and small risk are related to the corporate offices of the insurance companies. Hull risk, owing to large sum insured, are probability of losses of large amount in a reinsurance driven business. You see, because it could be a vessel of say 100 crore rupees. The vessel could be very, very expensive, costly. So 99% the hull business, the fleet, etc., will be a reinsurance driven business. For the rating of hull risk is divided into two parts. One is total loss, other is partial loss, that is other than total loss, or XTL only. They are they are first separately rated and then combined to get a single rate called slip rate, which is reflected on the policy. This is a simple example what I am doing it. Without hull manual, it is very difficult for you to understand also. But this is just an example. Say, for example, let us assume it is Shipping Corporation of India. The name of vessel is Maharaja. The year of built is 2005. Gross registered tonnage. I said that nowadays they don't write GRT, they write GT. GT is only 12,000 tons. The insured value is say 20 crores rupees. The type is a general cargo vessel. General cargo vessel, you can say it is a break bulk cargo carrier. The trading is worldwide, subject to institute warranties. So the total loss risk, considering age, GT, etc., is extracted from the book manual, and I am getting a total loss rate of 0.7%, 0.70%, not 7.7, 0.70%. The XTL, that is other than total loss rate. The considering this age group and this particular general cargo carrier, I am getting a other than total loss rate is 50 rupees per GT. So average element of risk as per size of vessel. So and then deductible is say 1 lakh rupees. So premium calculation on 20 crore rupees is 70%, point, sorry, 0.70% on 20 crore, which is coming 14 lakhs rupees. X, now this is from the table. You should have the table with you, both the tables for general bulk carrier, general cargo carrier. Then only you will understand, but I am trying to give the how the rates are given. If you have the table, it is simple. It is not very difficult. With 1 or 2 days practice, you will be expert in the ratings. So what is the other than total loss premium? It is 50 rupees for 12,000 GT gross tonnage. So which is coming 6 lakhs rupees. So 14 lakhs rupees plus 6 lakhs rupees, the total rate is 20 lakhs rupees. The 20 lakhs rupees, if 20 crore rupees is 1%, and trade discount you can give say up to 15% on the slip rate. So you may be in position to give rate of 0.75%. Nowadays people do not follow strictly this. You must have possession. I have just given example, but if you have the manual, your understanding will be very, very easy. Just to refresh, there is a voyage policy for particular voyage. Then there is a time policy which is covering a period of 12 months. Then there is a mixed policy. It is a marine insurance policy which offers a client the benefit of both time and voyage policy. This is recognized as a mixed policy. Then there is a port risk policy. This kind of marine insurance policy is taken out in order to ensure safety of ship while it is stationed in the port. Their trading limit may be 12 nautical miles from the prominent place in the port. Inland vessels are not supposed to go 5 nautical miles in sea. Single voyage vessel policy. This policy is suitable for small ships owner having only one ship. For having one ship is a different fleets. It covers the risk of one vessel of the insured. Then there is a fleet policy. In this policy, several ships belonging to one owner are insured under the policy. So this is very important. Just I am trying to refresh the earlier chapter what we have. Then we have also seen there is a hull and machinery policy. There is a freight policy. There is a disbursement and increased value policy. There is a loss of hire policy. There is a shipbuilder's risk policy. There is a ship repairer's liability policy. There is a charterer's legal liability policy. There is a mortgagee interest insurance policy. There is a port package policies. And then there are war and strike policies. There are different type of policies available in hull market for various type of interest in this area. These clauses in international market, these clauses are amended 95, 2003, etc. But we are still using 11083 in Indian market. So we have ITC hull total loss only, including salvage charges and sue and labor. Then we have ITC hull TLO plus general average and 3/4 collision liability, including salvage charges and sue and labor 11083. We have comprehensive cover ITC hulls 11083. We have again comprehensive cover for port risk ITC hull port risk policy 11083. In voyage policy, we have institute voyage clauses, total loss only, general average and 3/4 collision liability, including salvage charges and sue and labor. Then we have institute voyage clauses 11083. Then there is a coverage for the freight, that is institute time clauses for freight, institute voyage clauses for freight 1889. Then there is a disbursement and increased value policy. It is ITC hull disbursement and increased value total loss, including excess liabilities of 11083. So these are the main clauses normally you will find used in the hull market. As a cargo surveyor, cargo broker, or the cargo insurance company, or the consignee, you must have knowledge of hull and machinery, the problems related to hull and machinery, the damages can be there in different hull and machinery. So this is very, very important in the marine insurance. You must have knowledge of hull and machinery. The person who is in hull and machinery department is not taking much care of the cargo, or cargo is not taking much care of hull and machinery. But then the cargo person or hull and machinery person should understand the type, nature of cargo from both the type of underwriting. In this particular book, the attempt is not to be very specialized. There are specialized books of the Institute College of Insurance, Indian Institute of Insurance. This IC 67 is not devoted to hull, and that is the reason it is only just to have the basic knowledge, which I have tried to cover in my the presentation video.